Hey everybody, Smart Silver Stacker here. It's Monday, March 21st, 2022, and today I want to talk to you about commodities, specifically nickel. And what you're looking at right now is a big pile of 0.999 fine nickel bullion coins. And I'm going to cover why these specific coins are the best form of nickel bullion available to stackers at the moment, and also why I think there may be a huge opportunity with these coins for any enterprising stackers out there. But first, I do want to briefly touch on some of the price action in other commodities that we're seeing today. Notably, gold, silver, and oil are all back in the green. Oil had the biggest move, up over 5%, back over the $110 level, so it looks like the pullback in commodities that we saw last week may be coming to an end, but who knows? The markets have been so volatile lately that in the short term at least, it's anybody's guess. Part of why we've been seeing such volatility is the mixed signals coming out of Ukraine. Ukrainian President Zelensky has recently been calling for peace talks with Vladimir Putin's Russia to end the ongoing war and growing humanitarian crisis in Ukraine, buoying the hopes of a quick and peaceful resolution to this conflict. But then on the other hand, Zelensky also says that if the peace talks fail, this is going to be the beginning of World War III. So it's kind of hard to know how to interpret what we're seeing here. Also, Western media seems to really be playing up the story that Russia has bitten off more than it can chew and is facing tremendous and unexpected difficulty in its military campaign in Ukraine. And while there may be some truth to this, all media reports, particularly during times of war, really need to be taken with a grain of salt, and I don't think anyone should be reading too deeply into the fact that Russia has failed to completely overrun Ukraine at this point, because it really hasn't been that long. Russia invaded Ukraine less than 30 days ago, and in terms of conquering an entire nation, that really isn't very long. For comparison, Germany's onslaught against Poland in World War II took 35 days, and that offensive is often characterized as an extremely rapid victory. So we are still very early on in this conflict, and a lot of possible outcomes still remain on the table. Therefore, there still remains the possibility of supply disruptions, shortages, and much higher prices for many raw materials. But one commodity that isn't moving up, at least on paper, is nickel. And basically, from what I've read, at this point, the paper nickel market, it's kind of broken. What we've seen happen with the paper nickel market is an overwhelming confirmation of what stackers have been saying for decades. If you don't hold it, you don't own it. And that's what we're going to be talking about in today's video. So, let's get to it. To get started, I do just want to say a big thank you for tuning into my video today. If you enjoy watching it and you get some value from it, please do give it a big thumbs up down below. And while you're at it, why not subscribe to the channel? Back on March 8th, we saw the price of nickel spike up over 250% to an all-time high of more than $100,000 per metric ton. A price shock triggered by sanctions against Russia turned into a massive short squeeze, driving the price of nickel sky high, and then the London Metals Exchange, the market maker for paper nickel prices, changed the rules and halted trading. And we found out later that the cause of the short squeeze and the reason for the LME halting trading was a massive short position held by Chinese billionaire industrialist Chang Guangda. Guangda is the founder of the Tsingshan Group, the world's largest producer of stainless steel and nickel, and his short position was so large that this short squeeze would have bankrupted him had he not been saved by his cronies at the LME. Luckily for him, the LME was more than happy to change the rules at the last minute to save him, and also to prevent any traders who had long positions in nickel from realizing their rightful gains. And, you hear myself and other stackers always talking about counterparty risk. Well, this is exactly the definition of counterparty risk. In this case, if you had bought nickel on the LME and were holding a paper instrument that was supposed to represent the price of nickel, it absolutely depended on the LME holding up their end of that bargain. And in this case, they clearly failed to do so. Now, would there have been some turmoil in the markets if Chang Guangda had been forced into bankruptcy because of his short trade? Well, yeah, almost certainly. But that's okay. Sometimes the action in free markets is tumultuous. That's how things get sorted out, and that's how you achieve an efficient allocation of resources. But here's a question for you. Would Chang Guangda have made these bearish bets against nickel if he had not expected the LME to come to his rescue should the trade go bad? It might very well be that he would never have taken this risk in the first place if he had not known that ultimately the market was rigged in his favor. And that's why the LME halting trading to save a billionaire trader is exactly the kind of thing that creates this tremendous moral hazard and incentive for malinvestment. And this is just another example of why it's so important with metals to take physical possession of your investment. And let this be a cautionary tale to anyone who is holding any form of paper assets, whether that be dollars in a bank account or equities in a portfolio or futures contracts, what have you, that until those profits are in your hands, all those assets are really worth is a promise from an entity that at the end of the day we know can't be trusted. And that's not to say there isn't a place for paper assets, but I do think it's extremely important to hedge those positions with some physical, tangible hard money in the form of gold, silver, or even nickel. Speaking of physical nickel, let's talk about how you can stack some. If you've watched my previous videos on the subject, you know I'm a big fan of US nickels as a way to get exposure to the price of industrial metals. The main reason being that they are obtainable at their face value, which is well below their melt value. However, one thing about the US nickel is that it actually only contains 25% nickel, with the remaining 75% being copper. I don't really see this as a big problem, but still the fact remains that these are not a pure nickel bullion product. Now these, on the other hand, are Canadian nickels, which from 1922 to 1981 were struck in pure 0.999 fine nickel. And to be clear, there were a few years in that time period where the coins were not made of nickel. From 1942 to 1945, for example, during World War II, the coin was switched to an alloy known as tombac, which was 88% copper and 12% zinc. Here's one of those tombac nickels so you can see what I'm talking about, and you can see that it's very easy to spot the difference at just a glance. And then also between 1951 and 1954, the Canadian nickel was struck in chrome-plated steel. Here's one of those for comparison. And these are also pretty easy to spot at a glance. The chrome color is noticeably different from the pure nickel. And then from 1955 to 1981, these coins were once again struck in the 0.99 pure nickel. One nice feature of these coins is their weight. At the time of minting, each one of these nickels weighed 4.54 grams. And 4.54 grams just happens to be 1/100th of a pound. So I'm sure that that's an intentional feature of these coins and not just a coincidence, and it does make measuring out a 1 pound stack of coins pretty straightforward. Now, I mentioned that during the spike of the short squeeze, the price for nickel got up to 100,000 US dollars per ton. And if we convert that, that comes out to about 126,000 Canadian dollars per ton. So what does that equate to in terms of coins like these? Well, if it takes 100 of these coins to equal 1 pound of nickel, and a metric ton contains 2,200 pounds, that means that it would take 220,000 Canadian nickels to equal 1 ton of metal. With a face value of 5 cents each, that comes out to $11,000 face value. That means that at the peak of that short squeeze, each one of these nickels was worth more than 11 times its face value. That's crazy to me because in terms like that, you're pricing nickel coins the same way one might price junk silver. And if that's not a sign of runaway inflation, I don't know what is. Of course, that's a high set during a short squeeze. So is that even a real price? Who knows? Because this market is obviously manipulated. Chang Guangda was short 150,000 tons of nickel. And you know how much nickel the LME keeps on hand? About 30,000 tons. So in a market where one player is short more than 5 times the amount of the actual underlying commodity, who knows what the price really is? Like I said before, the only reason this guy would even have such a massive and risky position is because he knows that he can get away with it. That if it goes bad, he won't have to suffer any negative consequences. And this is a tremendous moral hazard, and it's hard to say that any price determined in such a market really reflects any kind of underlying reality. As for the LME's paper nickel market, they've had a very difficult time getting trading started again. I've even read that some traders who had long positions and were prevented from selling and realizing their profit have sworn to never trade on the LME again. Everything is still very illiquid, and who can blame investors for not wanting to participate in a market that is clearly rigged against them? This sort of development is exactly what you would expect to see as unsustainable manipulation and market rigging begins to become apparent. I've been saying it for a while. That which is not sustainable will not be sustained. and it seems to me that the cracks in these markets are starting to show. So I would forecast that this is not the last commodity squeeze that we're going to see before this is all over, and it's quite possible that these paper markets may not make it to the next monetary paradigm. And of course, none of this is financial advice. I'm just telling you folks what I'm doing, but that's why I'm stacking physical, tangible assets, the kind without counterparty risk. So why do I think that these Canadian nickels are the best way to stack physical nickel bullion? Well, if you start shopping around for nickel bullion, you'll soon realize that there are not very many products for retail investors. Online metal dealers don't have nickel bullion, your local coin shop probably doesn't carry any, and if you go on eBay and look for nickel bullion bars, you're going to see that sellers are charging a massive markup over the actual price of the metal. And I do want to talk more about that in just a minute because that actually could be a huge opportunity for an enterprising stacker. But to give you an idea of what I'm talking about, here are some completed sales on eBay from the past week, and you can see that people are paying $10 to $20 for 1 troy ounce of the metal. That is about a 1,000 to 2,000% markup over the actual spot price. And again, at the moment, spot price is kind of hard to determine because the LME nickel market is still kind of broken, so it's hard to say exactly what the price is, but it's definitely way lower than $10 per troy ounce. The price is probably close to somewhere around $17 a pound right now, and that equates to just a little over $1 per troy ounce. These Canadian coins, however, can be bought much closer to the spot price. I paid about $28 a pound for these, which might be a little high if you were shopping today, but I ordered these right after the price in nickel got halted, so I was okay with that price, and it was a small purchase anyway, so really I'm just glad to add some nickel bullion to my stack. I think if you shop around and look for the right deal, especially after the excitement regarding the short squeeze in nickel subsides, you'll probably be able to find lots of these coins much closer to the spot price, particularly if you look at some of the larger lots. And not only are these coins the most cost-effective way to stack physical nickel bullion that I've come across, I think there could be a tremendous arbitrage opportunity here for any enterprising stackers who are knowledgeable about metal smelting. It seems to me like there's a real need in the market for affordable nickel bullion products, and the fact that people are willing to pay these extremely high markups for these little 1 troy ounce nickel bars is an example of that. While it is illegal to melt US nickels, there's no such law regarding these old Canadian coins. So if someone out there were to buy lots of old Canadian pure nickel coins, melt them down, and make some nice hand-poured bars, say 1 pound in size, I think that that could be a good value add in the marketplace and possibly a profitable venture. Now, me personally, I don't know anything about smelting and I'm kind of clumsy, so I'd probably just burn myself horribly if I were to try it, so I'm just going to put that idea out there for any of you watching who might have some real skill sets in that area. I'm not sure how difficult nickel is to melt and pour compared to gold or silver. I know it does have a much higher melting temperature, so I'd imagine it is more difficult, but I don't really know how much more so. And if you're a smelter yourself, let me know what you think about that down in the comments below. And if you enjoyed this video and you'd like to see more videos about copper, nickel, gold, silver, and commodities in general, then check out the videos popping up on your screen right now. Thank you all very much for watching. Don't forget to like, comment, and subscribe, and I'll catch you next time. Smart Silver Stacker, out.